but the last one on our radar today, IT giant HCLTech reported their Q4 numbers as well. Revenue came in line with estimates, but the growth outlook is lower than expectations. Reema is here with the key earnings highlights. Reema.
Thanks so much for that. So it's a muted quarter for HCLTech, this time in Q4, but the street is disappointed by the FY25 guidance. So first on the Q4 numbers, revenue growth is just 0.3%. Margins have declined by more than 200 basis points on a quarter-on-quarter basis at 17.6%, missing street expectations. But here's the biggest disappointment. The company is guiding for only a 3 to 5% revenue growth in FY25 versus street expectations of 5 to 7%. The company said two key reasons for this guidance. One, they're saying Q1 will see a revenue drop of 2% because one large project or deal is moving offshore. Typically, when a project moves offshore, the revenues are lower. And secondly, in Q2, there will be an additional headwind of 80 basis points due to State Street. There was a BPO JV which they exited. There will be a negative impact on the revenue. So growth for the company will be back-ended. But HCLTech will be one of the few companies where FY25 revenue growth will be lower than FY24, and the street is disappointed. Jefferies has cut the target price to $13.90. They have a hold rating. They say weak growth caps the upside, but high yield limits the downside. Kotak is now saying in FY25, the company will do a 4.9% revenue growth. Earlier, they were anticipating a 6.8% top-line growth. Kotak too has cut the target price to 1,600. And for Nomura, the target price is lower to 1,400. Back to you.
Okay, all right. Thank you so much for that, Reema. In fact, we'll have the management of HCLTech joining us today at 9:30 a.m. to discuss their fourth quarter earnings, outlook and more. So stay tuned to CNBC-TV18 for that discussion.